Ever pondered the inner workings of the stock market? It might seem like a complex web of numbers, charts, and transactions, but it can be simplified into understandable terms. A stock market, also known as an equity market or share market, is essentially a meeting place for buyers and sellers of stocks, which are shares representing ownership claims on businesses. These stocks can be securities listed on a public stock exchange, or they can be traded privately. Private shares are typically sold to investors through equity crowdfunding platforms. The driving force behind this trading activity: investment strategies. Investors make these strategies with specific goals in mind, such as long-term growth or short-term gains. The sum total of all publicly traded stocks worldwide has seen a significant increase since the 1980s, rising from $2.5 trillion in 1980 to $93.7 trillion at the end of 2020. As of 2016, there are 60 stock exchanges in the world. 16 of these exchanges have a market capitalization of $1 trillion or more, accounting for 87% of global market capitalization. The majority of these exchanges are located in North America, Europe, or Asia. Breaking it down by country, the largest stock markets as of January 2022 are in the United States, followed by Japan and the United Kingdom. A stock exchange acts as a market where stockbrokers and traders can buy and sell shares, bonds, and other securities. Many large companies have their stocks listed on a stock exchange, making the stock more liquid and thus more attractive to many investors. The exchange may also act as a guarantor of settlement. These and other stocks may also be traded over the counter, that is, through a dealer. Some large companies will have their stock listed on more than one exchange in different countries to attract international investors. Trading in the stock market means the transfer of a stock or security from a seller to a buyer in exchange for money. This requires the two parties to agree on a price. Equities, or stocks, confer an ownership interest in a particular company. Participants in the stock market range from small individual stock investors to larger investors, based anywhere in the world, including banks, insurance companies, pension funds, and hedge funds. A stock exchange trader may execute buy or sell orders on their behalf. Some exchanges are physical locations where transactions are carried out on a trading floor, known as open outcry. This involves traders shouting bids and offering prices. The other type of stock exchange has a network of computers where trades are made electronically, such as the Nasdaq. A potential buyer bids a specific price for a stock, and a potential seller asks a specific price for the same stock. Buying or selling at the market means you will accept any ask price or bid price for the stock. When the bid and ask prices match, a sale occurs. The purpose of a stock exchange is to facilitate the exchange of securities between buyers and sellers, providing a marketplace. The exchanges provide real-time trading information on the listed securities, aiding in price discovery. In essence, the stock market is a complex yet fascinating system where buyers and sellers come together to trade ownership of companies. It's a world of investment strategies, bids, asks, and transactions, all playing out in real time on the global stage.